Hey all, it's Brent Bruce over here at Network Funding. I wanted to reach out today and talk a little bit about really some of the basics about getting a home loan. When I talk to my clients so often, what I really try to do is educate on what that process looks like, rather than just telling somebody you're approved or you're not approved. Your payment is going to be $1,500, or you can purchase a house for $300,000. While those things are important and we need to get into them, I also want to make sure to educate so that the people that are purchasing homes and taking these mortgages can understand a little bit more about what it is that it means to qualify for a home loan. So in the next few minutes here, I'm just going to go over the three main questions that a bank asks themselves. This is what the bank is thinking when they're qualifying you for a home loan. So really comes down to three major items. And here they are. The first question they're going to ask is, do these people pay their bills? And that's where we're looking at credit reports, credit history, sometimes looking at rental history, just trying to get a feel for, has this person been good at making their payments? So we're looking at delinquencies, we're looking at missed payments, we're looking at how much debt does that person have in comparison to how much they can handle. So we're kind of analyzing that. A lot of times people just think that it's based on the FICO score, and that's really not the case. We'll get into that further in other videos, but just know that because you have a great FICO score does not necessarily mean that you qualify for a home loan. Even from the credit perspective, there's more detail than just the FICO scores. Now, if you have an 800 FICO score or a 780 FICO score, of course, chances are you're going to be okay from the credit perspective. But there are things that can get in the way. I have had to decline people or not been able to approve people at times with FICO scores in the 700s. So the first question that the bank asks is, do these people pay their bills? The second question that they ask is, do these people have enough income to be able to qualify for and support this new mortgage payment? So that's what we're looking at, a thing called debt ratio. And debt ratio, to make it easy, we're going to use some big numbers, but to make it easy, if you had $10,000 a month in gross monthly income and you had $4,000 a month in bills, you have a 40% debt ratio. And what we're looking for is we'd like to see your debt ratio, or the people that are buying these houses, we want their debt ratio to be 45% or less. Sometimes we're able to go a little higher. Sometimes we need it to be a little lower, but that's a good number that kind of is more of the higher range of where we want to be on a debt ratio. Now, what is it that we're using to calculate this debt ratio? First of all, gross monthly income. So this is before the taxes are taken out. Now, if you're self-employed, we actually have to do income analysis. It's not going to be as easy as someone who is paid, say, an hourly wage or a salary. But if that person makes $100,000 a year gross, that is their salary before taxes, that's the number that we're going to use for income. As far as what expenses we use, we're looking at things that are going to be on your credit report, things like your school loans, car loans, credit cards, installment loans, personal loans, things that are on the credit report, as well as the new mortgage payment, which of course we're going to calculate during the qualification, and also a couple of things that sometimes bite us, sometimes jump out at us and get us, would be child support, alimony, and sometimes people are in tax repayment plans to the IRS or to the state. So if they owe the IRS $8,000 in back taxes and they're paying $200 a month, that's something that we're going to have to consider. Now, some loan programs have some other items that we have to consider. I'm not going to get into those in detail, but some programs need additional detail, some need a little bit less. But in general, you're looking at the things that are going to be on your credit report. So what you want to know that we're not considering is we're not considering cell phone bills, utility bills, electric, water bills, anything like that. We don't really include those in the debt ratio from a general perspective. Okay, so that's question two. Can these people afford this new payment based on the income to debt ratios? The last question that the bank is going to ask when we're qualifying someone is, do these people have enough cash to cover their down payment and closing costs. In the industry, what we call is this is called cash to close. How much cash do you need to close escrow or to purchase this property? So if your down payment is $20,000, a lot of people think, oh well, I'm buying a $400,000 house. I'm putting 5% down, so I need $20,000. Well, that's correct. That's what you need for the down payment. But when you purchase a house, there's also closing costs. And those closing costs are going to be things like appraisal fees, escrow fees in some states, title insurance premiums, appraisers, termite reports. I mean, there's just a lot that can be included in closing costs. So in my state here in California, in Southern California, if someone is purchasing a property, let's say it's a $400,000 purchase price, chances are those closing costs are going to be somewhere between $8,000 and $10,000 if we're including their property taxes and their homeowner's insurance in the monthly payment, because we have to establish what is called an escrow account. Some people call it an impound account, which is a big chunk of money. So that person now doesn't have to put $20,000 down. They need closer to $30,000 for their total cash to close. So what we're looking at when we're qualifying someone is, based on the purchase price that we're looking at and the closing costs that would go along with that purchase price, how much cash do they need and do they have it? So if that person shows me, let's say that this person needs $30,000 and they show me a bank statement that has $50,000 in it, and I see, hey, this person is good. They've got enough cash. A lot of times people are using their 401k. They're going to take money out of their 401k. Well, if I see that, they have plenty of money in investment accounts, we might be able to use that and qualify that question as far as do they have enough cash to close? Well, yes, they do, because they have $100,000 in a 401k account and they're willing to use it. That's the other question. Just because you have money in your 401k doesn't mean you want to use that money in your 401k. So that's part of the discussion is, does this person have enough cash to cover their cash to close? Now here's the thing. In some cases, people can use gifts from family members. Sometimes the seller will pay for a portion of their closing costs to keep that amount down. Sometimes the bank, the lender, can pay for some of those closing costs as well to try to reduce the expenses associated with purchasing this property. So structuring the transaction becomes important when you're looking at all the different ways to put things together. And that's something that it just really takes professionals to help you with that. A professional lender, loan officer like myself, professional real estate agent that knows how to make those negotiations and knows your market. Those are important things that have to be considered. So again, going over the items that the bank is usually looking for, the main items they're looking for, the questions they're asking. Does this person pay their bills? So you want to analyze that. What we want to hear is, yes, check. Does this person make enough money, have enough income to cover their expenses with this new mortgage? We analyze that. Things look good. Check. Question 2 is a check mark. Okay, we're good. Question 3, does this person have enough cash, assets, money to be able to pay their closing costs and their down payment, and then any other amounts that are necessary with that specific transaction? So is there enough cash available? So we look at the bank statements, the asset statements, the 401k statements, anything like that that might be available, maybe gift funds, and we put that all together and determine if this person has enough cash to cover their cash to close, their down payment and their closing costs. So those are the main 3 questions that we're looking at. Now, we've simplified it by going through that in just a few minutes. This is something that usually takes sometimes an hour or 2 hours to really look at and analyze the income documentation and the asset documentation to make sure that you will qualify when you actually get into escrow on a property. And that's what I do. That's what your professional loan officer or mortgage person should be able to handle for you. But just wanted to give you a little bit of information about 3 general questions that you want to be asking yourself, or that I'm asking when I'm qualifying my clients. Those are the 3 main things that I'm looking for. So more is going to be coming out on debt ratio, cash to close, credit analysis, all those different items in future videos. So make sure that you subscribe below so you can learn a little bit more, so that you are knowledgeable when you do go into escrow and into purchasing a property. If you're in the state of Arizona or in the state of California, just give me a call. I'd be happy to talk to you on the phone, go through all this information with you, and we can analyze your specific cash, credit, and income and make sure that you're okay. Again, California or Arizona, my number is 909-463-4750. Just give me a call. I'd love to talk to you directly myself. And if you need anything else, just let me know. I also have other loan officers throughout the country that I could refer you to that will do a good job for you. So subscribe below. We'll get more information out to you. Let me know if you have any specific topics you have questions about. I'd be happy to answer those questions for you. Have a great day.